You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know the deal. You know how to get us. If you prefer your music, or should say your shows, really, in podcast form, then the easiest place to get us, of course, iTunes, TuneIn, Stitcher, our mobile app, and, of course, the old website. Just head on any of those places you like and grab it there. It's coming out the next business day after we record the show, which is, of course, every Friday, noon Central, 1 p.m. Eastern. If you like it a little bit more immediate, and you can, of course, join us live every Friday at that time via Mixlr, M-I-X-L-R. Grab that link, set it, and forget it. A little spoiler alert for those of you out there who maybe you fall somewhere in between. You like to hear it sooner than the podcast is out, but on the other hand, you can't join us live because you're busy, you're working, you got a day job, you got a life. I get it. Well, of course, we do post the recordings of our live streams to that Mixlr account after the fact. Just head on over there, click on the show reel, and you can listen to it. It's a little bit raw. It's a little bit not as quite as polished as the end podcast with the cool intros and the transitions and all that good stuff. But that said, if you want it in that intervening time period, it is available for you there via the Mixlr show reel. And those go away usually after probably like a week or two. So we try to keep them up to date. So you probably get the most recent week or two's worth of shows. But after a session or so, usually the podcast is out anyway. So in which case you don't need it. But we like to make them up there available for you. For all of you who fall in between somewhere, we'd like to take care. And of course, however you fall, make sure you hit us up. Questions, comments, insights, pearls of wisdom, disgruntlement about VIX ETPs. Share it all with us. Many of you have and continue to do so. Hit us up. You know where to find us. Easiest place, @options on Twitter or on StockTwits, or via the old email, questions@theoptionsinsider.com. All right. As we get rolling, listeners, with our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we do what we say. We view some volatility across the entire spectrum of vol products. So that means usually we start and end somewhere in and around the VIX product category, but we add in a lot of your favorites too, and maybe some of your less favorites this week, including your VXXs, your SVXYs, etc., so on and so forth. Of course, I mentioned as we are recording this, and streaming it live a little bit past noon Central here in the 1-2 time zone. It's been a tumultuous morning already. We saw, the fallout of the trade war, or the impending trade war, I suppose you could say, continuing to roil the markets. We saw pretty aggressive sell-offs across the board to start the session. And as we're coming to you live now, a lot of that has pretty much come back. So we're seeing S&P actually up on the day, about 0.25% or so. The tech-heavy NASDAQ up nearly 0.5%. Dow still the laggard, as you might imagine. A lot of those trade war susceptible companies lurking there still in the old school Dow, with the Dow down about 0.3%. Interestingly enough, our good buddy over there at Trade Alert, Mr. Schwartz, sharing out some interesting data. Of course, check it out for yourself, tradealert.com, where they have a retail version option alert showing just what's been going on out there in the options market when it comes to all things U.S. steel. From a vol perspective, it certainly has been an interesting development. You might think a trade war would be negative for them, but the stock's actually been in rally-ho mode. We've also seen the vol getting bid up across the term structure, particularly a little bit farther out, as Henry alludes to in his little research note here. The vol term structure in U.S. steel is suggesting March not going to be a boring month at all here in terms of U.S. steel. Also a lot of action out there in your calls. So if you're out there slinging a little U.S. steel, maybe you thought that was a sleepy sector you didn't want to play this month, not so much. The U.S. steel actually down on the day right now, about 1.3%. So taking a break from all the gains going on out there in all things U.S. steel. Interesting developments over the last couple of days in that product because, as you know, trade wars, not exactly, you'd think, good for business, but apparently in the whole world of U.S. steel, this has been a topsy-turvy one indeed. I'm going to save, we talked a little bit about SVXY, I'm going to save it for a little bit later in the show once we get all the connectivity sorted out with our other counterparts here on the show. One of those days, listeners, it's topsy-turvy markets. People are hither and yon running around. Sometimes it's difficult to get everybody nailed down at the same time and place, particularly when the market sells off and then comes back in rally-ho mode fashion. So we'll table our discussion of all things SVXY. I will say this, though. We have been asking you guys a lot about whether SVXY is durable. And we had asked you a couple of weeks ago, and pretty much you guys were evenly split if SVXY would even survive the year. Would it survive 2018? It was 42% to 42%, yes versus no. People were evenly split. We had a little other in there, too. That siphoned off the rest. But pretty much dead heat in terms of whether it would survive. Of course, the recent changes have made it, ironically, more likely to survive from a literal sense, but in terms of demand for the product, maybe not so much. So maybe it might die a death of 1,000 cuts instead. Either way, we asked you guys yesterday, do you think the recent changes will allow SVXY to survive 2018? Well, now you guys are pretty much unanimous, 50% exactly saying yes, with 24% saying no, and we got about 26% saying that they're done with all things inverse vol, inverse VIX. Can't say I blame you. It's been a bit of a, shall we say, tumultuous period out there in all things inverse volatility. Of course, XIV coming off the board, SVXY becoming, I think it's fair to say, a pale shadow of its former self. We have had some people write in arguing that maybe it wasn't entirely their fault over there, and I could certainly see a little bit of that. But either way, of course, with all this market tumult, we did see VIX cash trending northward there over the course of the last few sessions, with VIX cash spiking as high as about 25 and actually getting as high as 26 today, 26 and a quarter earlier when all the sell-off was going. So it's been kind of a wild day. We've already had almost a 6-handle swing just in the VIX cash itself, and it's been crazy nonetheless. I do believe, listeners, the Skype gods are smiling on the crew over there in the land of the pit now. Let's see if we got him. Mr. Meatball, are you joining us, sir?
I am here. It's good to see everybody.
I see you survived the dangerous refried beans aisle at Costco, I see.
I did. I was stuck on I was stuck on the floor of the SIBO and unable to get off for a couple minutes there. But I'm here, and I'm full of fear, otherwise known as the fear gauge.
Haven't we all been there, stuck on the floor of the SIBO at one time or the other, wishing we could get off, and yet somehow stuck? Usually that would be back in the day when we were trading down there, and it would end up well. Or you stuck in series is also another place people like to get stuck.
No. Although I may be stuck there later.
I knew a lot of people when they got hung on deltas, they would end up somehow magically stuck at series. That's how I could always tell the guys I was working with when they were hung on some deltas because they were hanging out at series. But that said, we're digressing, Mr. Meatball. It's been an interesting week and indeed an interesting day. We've kind of in many ways lived a week so far already in just in today's session. Massive sell-off, then a lot of it coming back here as we're talking. A lot of indices actually up on the day. So what's your morning like been like first, and then B, what are your thoughts on the tumultuous week we've had with all sorts of trade wars and everything else popping off?
Yeah, it's definitely been tumultuous. There is tumult. We've been moving around. Interesting day. I'm looking at a sea of red, and then the Russell 2000 up 1%. And it just goes to show you small caps are, they're getting the benefit of some of this interest rate policy, and it's pretty fascinating the way everything is kind of run around.
I know you mentioned before you haven't really, I think by the benefit to paperwork, haven't launched the Vol Fund. Is that ready to go now? Or are you still waiting for some paperwork to be signed? What's the status on the Vol Fund, given that these are somewhat volatile markets?
Yeah, I mean, it's been kind of nice, right? I missed 100 points while I was waiting for this thing to be able to get loaded. Now here I am, and we'll see where we go from here. I'm going to certainly be looking to try and get into something, so hopefully that happens.
Speaking of missing, I think I missed the scoop while I was hosting the show on some back in the earlier downswing there, trying to scoop some, shall we say, ridiculously cheap VXX puts. I don't think it came to pass, and unfortunately I'm hosting, so no time to babysit there. But I was the best bid, so no dice there, I don't think. They're getting a little cagey, I think, about selling those too cheap at this point out there. But let's get into it, Mark. Like I said, it's been kind of a crazy week. We mentioned the VIX cash getting into 26 today, so now it's shy of 21. So we've already seen a 5.25 point swing just in the VIX cash alone, just in the past couple of hours. So there are not many days we could say that alone. So already, like I said, we've lived a week in a day in and of itself. Coming into today, we saw, shall we say, I think the technical term is ridiculous backwardation out there in the VIX futures. The cash was several handles above the futures. As we're talking right now, it's only a mere, 1.25 or so above the futures. Anything crazy out there catching your eye from a VIX futures perspective, other than the fact that the cash is just on a wild ride?
It's been, the cash is running around. The futures have been really strong, and I'll tell you, find me something that isn't correlated right now, and VIX is about it. Maybe gold, but like SPOOs and bonds are correlated, and basically every asset is correlated except for what amounts to, I think, gold and vol stuff, variance stuff. That's it. That is part of the reason why there's such strong demand. We are seeing, relative to the index movements in the S&P, excessively strong VIX movement, and I think that's directly a result of. It is directly a result of what's been happening with the bond market and with the S&Ps.
I'm looking right now, and speaking of quote-unquote non-correlated, our old friend, the Bitcoin futures, are off about 170 points right now on the front month or so. So I guess you could say either they're inversely correlated to the S&P or perhaps they're correlated to the Dow. Take your pick there, Mark. But, I think we've all seen the people who've been arguing for a non-correlated asset in Bitcoin. I don't know if today's the day you want to make that argument. Is the new Vol Fund going to sling a lot of the Bitcoin futures, sir?
Oh, we're just going to go crazy with Bitcoin. No, we're not going to sling Bitcoin.
We mentioned here, I think earlier in this week, but over there, I know our buddy Mr. Rhodes used to join us on the show quite frequently. He does a lot of interesting updates out there, and he's been tracking a lot, particularly when it comes to index and volatility, big sell-offs, we've known our friend Mr. Buffett out there like to take advantage of them, maybe a little bit more than today. We're talking about, 07, 08 type sell-offs. Take advantage of those to get himself a little bit of juicy put premium when he's writing, shall we say, aggressive strikes out there in the S&P. And people out there like Russell like to track these things. There's people out there tracking Buffett's portfolios, trade like Buffett, all that stuff. Good to see someone's actually out there tracking his put positions too, kind of the lost component of Buffett's holdings out there in terms of portfolios. He started opening these up. I think the data here goes back to around the 07, 08 time frame, but he actually has some going back a little earlier. It's like to 05 and even 03. 2010, he closed out some, and about a little less than $250,000 profit was booked at the time. He had about $4.2 billion worth of net premium that he had actually received, and looks like coming up here at the end, or at least towards the end of 2017, which is as far as this data goes here, he's looking pretty good. He's net up $2.32 billion on the options there on these strikes. So I guess, Mr. Meatball, the moral of the story is, far from being weapons of financial mass destruction, if you too can command the premiums that Warren Buffett can when he says, hey, I want to sell you a put to someone like Goldman. They say, okay, yes, sir. We'll pay orders of magnitude more than it's worth for you. So I guess the moral of the story is, Mark, if you can command the Buffett premium, then you too should be selling premium. Would you agree?
Yeah, especially if you can finance yourself and you're not going to go out of business. Absolutely. Why not? Right? Why not?
So when the Carmen line comes knocking on the door to sell some puts, do you get that same treatment? Do you get hey, the door is open, the kimono is open, we will pay you 30 to 50% on top of what these puts should be worth because it's you? Is that what you get?
Yeah, here's 50x. Here's 50x margin. Go have at it. That's what we get.
That's the love. I can see that. Maybe with the new Vol fund, we shall see if even more doors open to you on the premium side. Speaking of all things VIX and volatility, it has been, like we said, an interesting week. And let's see how the numbers are reflecting. Like we said, VIX has been pretty strong, I think, of late is an easy way to put it. It's still averaging over 1 million contracts a day, 1.05 to be precise. And today so far looking pretty strong, 738,000 contracts on the tape as of a little bit past noon central here, about 2.5 to 1 yet again today, calls over puts. That's getting us we're still pretty, when it comes to open interest, it's still pretty weak in terms of calls versus puts. All of you who like watching that VIX call to put indicator, it's about half what it was just about a month ago. So, of course, all that upside move, taking out a lot of the calls. And, of course, a lot of people, when it retreated back to the downside, people loading up on puts. All of that has kind of the 1-2 combo effect of reducing that number quite aggressively. And so far, we have not seen it really shoot back up like you might expect. So take that for what it will. We've discussed this many times on the show, what I view about this indicator. But a lot of people like to watch this VIX call put as a bit of a canary in the coal mine. So far, it's hovering right around 2 to 1, which is historically low for this name, so not a lot going on out there. Yesterday, we hit 772,000 as well. Wednesday, 572,000. Tuesday, 525,000. And Monday, 614. So everything this week, pretty much, except for today, we'll see how we end up today. Everything pretty much well below the ADV out there in VIX options land. In terms of what was cooking this week, what were the hot strikes with all the options action, all the options interest? What are the big size positions right now out there in VIX land? We'll break it down right here with our top 10 hot VIX strikes. Number one, the March 25s, just shy of 500,000 contracts open there. So we knew that was our friend's strike. Clearly others have flocked to it as well. It seems like whenever he would open, and he's pretty sure he's closed out on everything now, unless he's deciding to play again. I don't think so. But we've seen a lot of people playing and enjoying that 25 strike, and people have just, ever since he started playing with it back in, July, we've seen people just flocking to that strike. It's been kind of interesting to watch. Number two, the March 22s, 330,000 open there, so dropping off quite a bit between number one and number two, almost 150,000 contracts difference. Number three, just a tick under 300,000 for the first put on our list, our other friend's favorite contract, the March 15 put. Number four, another put on the list, again, reflecting why In fact, we got 3 total puts in the top 10 this week. It's been a long time since we had that. So that shows you, again, why that call to put out there in VIX options so low. Number 4, the March 14 put right behind it, right about 250,000 contracts open there. Number 5, the March 16s, 243,000 contracts. Hot on its heels, the March 12 put, the third and last put on our list here, 242,000 contracts there. So hot on its heels there. Number 7, the optimistic March 30s, 240,000 contracts open number there. Number 8, the first and the only April on our list, the April 22s with 237,000 contracts open there. Number 9, the March 15s, far more reasonable. March 15s, 218,000 contracts there. And rounding out our top 10 on the hot VIX strikes, March 17s, kind of the Goldilocks strike, splitting the difference there, 209,000 contracts. OI still pretty robust. Total about exactly 12 million open out there. We got about 8.2 million on the calls and about 3.8 million open on the puts. Mr. Meatball, it's been a wild week in terms of VIX options. Anything out there really catching your eye, lighting up your tape personally over there, sir?
Of interesting trades. You'll like this one. This is something that a guy did today in SPX, or not SPX, in VIX. He sold the July. Oh, I'll find it here in a second. He did the. We've seen a lot of stuff trade. We saw a big June 11 put seller, a March 14, 16 put buyer. But a guy sold like the July 75, July 10 strangle at 18 cents. I mean, talk about like squeezing.
Say those strikes again.
It was like the July 75. July 10 strangle.
75? Wow.
And he bought, and he did 8, and he got eight. Yeah, I think something like that. It was something along those lines, and he got 18, and he got 18 cents for it. I'm going to see if I can find the exact trade, but I looked at that. I said, well, he's certainly playing for the unlikelihoods. And here it is, the July 10 75 strangle. He got 18 cents. Sold it 10,000 times.
that just cracks me up. That brings a smile to my face.
I had a feeling you'd like that one.
We might have to call our episode here "Ridiculous VIX Strangles." What do you think? That certainly qualifies. That's why I had to ask you to repeat that strike twice. I thought I misheard you. The 75 strike. That's, of course, this is the time of year we have joked, but February into March is the time frame on the show in the past where we have noticed weird, some might say aberrant activity. Usually it's in the far upside, like in the Feb cycle of, obviously we're into March now, but still in the Feb cycle of we see these weird people buying 70 and 75 strike calls for weird things. I can't recall off the top of my head anyone coming out and selling those, let alone as part of a strangle. That's a bit of a new one. I can't imagine there's a mighty bid on those 75s. You kind of got to wonder at what point, why are you even including that strike in your trade? Do you see off the top of your head, what did he get for those 75s?
I mean, you got to think he probably got 10 cents for those, and they probably did it like 9 and 9 or something like that. I mean, that's amazing. And truthfully, where does he have the risk though? I mean, I would say probably more on the. He probably has more risk on the put than he does the call. Although, because settling there, it could get to 75. He could take some heat. He really could. I could see the 75 calls. Where did some long dated stuff at the absolute peak of this latest vol move? Let me pull something up here. At the absolute peak of this latest vol move, when things were just at their worst. Where did let me look. I mean, you could see, I'll just go to like June, right? Or I'll even pull these up. The June 70s were 40, 45. The July 70s were dime bid. So there's definitely some risk there around all of this. On February 6th, some of this way out of the money stuff, the VIX was 30. The July 75s, I mean, the 70s were dime at 450. So he could take some heat. He really could.
That kind of brings to mind that story. I think Bill was sharing on the show last week, where you have this kind of low probability, shall we say, short, net short VIX call position, and suddenly you get that. Imagine if you got that margin call on those short 75s. Can you just imagine what that would feel like? You're getting a call. These things are 4x in your face now. You sold them at a dime. They're now 40 at 45. That's got to be, I think, a bit of a humiliating margin call to get, Mr. Meatball. Would you agree?
Yes, for sure.
Would you think if that happens to you, you kind of have to surrender your fund manager card at that point?
Yeah, I mean, I just don't get it. Selling that to collect 18 cents. It's probably some RIA that does that, and it's a strategy that looks great on paper, but the margin could be a real problem for them. I don't think they'll actually blow out, but it could be a problem.
But he ran the Bollinger Bands, Mark, and he ran those, and he said, "Oh, wait, this is several bands out. This is a safe strangle. I can get 18 cents for it." I can't stop talking about it without cracking up. So maybe we should move on, because I could probably talk about it for a while. But that's a good one. That might have to go into I'm going to file that when we do our end of year shows for just outlandish / ridiculous. Let us know what you think. Maybe you guys like this trade. Maybe you think that's a free 18 cents. I'd want to pick that up 10,000 times. What was the month again, Mark, that he was selling this in?
July.
So you got some time to sit on this one. You got some time.
Yeah, no, but like I said, I don't think the risk is it actually one of those actually selling in the money. Maybe the 10 puts. If we had like a major mean reversion or a major reversion back to super low vol. But, the 75s, if we got an extended push higher, those could start going 50, 60, 70 cent bid, and that would be a real problem.
Yeah, that would certainly be a problem. Yeah, I'd definitely be sweating the puts more on this. But yeah, the 75s, if that comes to pass, then I think it's fair to say we're in full-on trade war, if not hot shooting war with somebody when we're hitting the 75s for real action. But of course, as you mentioned, we did have spikes before. VIX cash threatening 50, if not quite getting there. And then, of course, we had the futures commensurately getting pretty aggressive. So you could easily see in the panic those calls getting a little bit more bid up. Crazy stuff, nonetheless. Speaking of crazy, our old friend VXX has been acting up yet again. Like I said, it did its old reverse split last year. Got up to right around close to the 50 level. Then proceeded on par, following the contango right on down, and eroded to right about half of that. Then, of course, February hit, and we kind of reset the clock yet again, and it's been bouncing all over the place ever since. As I mentioned, I was trying to work some puts this morning. I got a little busy. Got to babysit those. Those things move around quite a bit, but I was being a little bit of a piggy on those two, so I don't think I got filled. But that said, VXX getting rally homo, then coming off again a little bit today, hovering right around 47. As we're recording this, getting as high, breaking the 50 handle, 50.68 intraday. This is the name that's been averaging 343,000 contracts in a day, and so far already on the tape, 343,000 contracts exactly. So it's been lighting it up, shall we say. Pretty even, actually, 1 to 1.2 calls to puts. So pretty interesting out there. You'd think, given all the heat out there of late, that the puts would dominate. Puts are about 2 to 1 in the open interest, but still interesting stuff. And Mark, I'm going to ask you a very tough question now. I know it's been difficult for you in the past. It probably brings a bead of sweat to your brow. I'm going to do it to you again. I'm going to ask you right now, what do you think is the number one open interest position out there in VXX options? You have 5 seconds to go.
Is the Jan 10.
Oh, how do you do that every week? Time after time, sir. It's amazing. Yes, it is. Once again, the Jan 10 puts refusing to go away. 160,000 almost, just a tick under open on that strike. So they've actually been growing in OI since the last time you and I talked about them. Number 2, I think last week was the Jan 5 puts in 2019. This week they're down to number 3, and they've been usurped by the Jan 2019 15 puts. So it's kind of a nice little juicy put strip there. 71,000 open of each. Maybe there's a little bit of a vertical. The OI is almost exactly the same on both strikes. So probably not a coinkydink. Maybe there's something going on between the two of them. I'll have to dig in a little bit. Number 4, the March 35 puts. Interesting. there and round out the top 5 there, the March 27th. In fact, the top 10 is all puts. We had marked that there were some calls open still a couple weeks ago, but those are all gone. That's all puts all the time now, all the way down to the March 30 puts. Let's flip the script a little bit, Mark. Our old friend SVXY. We're going to play the same game. It's been, of course, an interesting week for all things SVXY. We talked about it a bit on Option Block, so I guess we don't need to get into it a ton again today, but we can, of course. People are still fired up about it. I think when we get to the mail, we got a lot of mail. We're going to do a lot of it today. I think we're going to get into it more again because it's kind of inescapable. But I will ask you this. What do you think is the number one open position in SVXY?
SVXY, I'm going to say they're very unhappy. And the number one open position SVXY, I'm going to say it's the 100 calls.
That would be a very relatively sane and cogent guess. Actually, no. It's the Jan 2019 25 put with about 42,000 open on that. What's interesting enough, too, is this one was trading pretty hot and heavy. It actually there were 80,000 contracts open on this strike going into the big sell-off on the 5th. And over the course of those 2 days, the 5th and the 6th, 100,000 traded on this strike. And now we're down to 42,000, so they've cut the open interest in half. I know there has been a lot of speculation, people writing out there about Peter Thiel and others, if they were someone out there specs for size on some downside in SVX. I can't say for certain if this was his strike or not, but someone had size on the 25 put strike and took a bunch of it off. Go figure. After the big meltdown on the 5th and the 6th. So interesting stuff. Number 2 in SVXY. Then we're getting into some call action. The March 15 calls, 15,000. March 20 calls with 14,000. The Jan 2019 40 calls. Got to guess those are probably a legacy or definitely put on before this week's news, certainly. The chances of hitting those now are much less. 11,000 there. On the top 5, actually another put on the list. The March 10 put, 11,500. Interesting stuff out there in SVXY land as well. We're going to get into more of it in a little bit, listeners, when we get to your mail on this subject, which is loaded up for all of these stuff. We always like our Goldman surveys here on the show, Mr. Meatball. And there's another one coming out. I think it came out this week. And they were saying, Mark, we have to pay attention, of course, because it's Goldman talking vol. But they were saying that the cost of puts in a variety of sectors they had noted was higher than normal. So go figure. As they term it, quote unquote, substantially higher now than it was before the big meltdown back in the beginning of the month. So according to them, the cost of puts, they're looking at spider sectors. That's how they're doing this analysis. The cost of puts in the healthcare sector, XLV, spider, of course, is up nearly double since the big peak, right, going into late Jan, early February. There, the big peak for the markets when you think people would be hedging at an aggressive clip. Also up nearly 90% for the XLP, which is the Consumer Select Staples. They also go so far as to look at some puts in individual names. The Citigroup up nearly 150% since, again, these are all pretty much not quite on the 5th of February, but like the week before at the end of January when things were hitting their high in terms of equity markets. 150% since then, 150%, close to 144% in JP Morgan. And our old friend Amazon, cost of puts up 81%, sir, since the market's peak. I'll have to look into the methodology. I think, they're looking at the average cost of a 3-month put. They don't say how far out of the money they're going. I'm going to assume maybe somewhere 5-10%, somewhere in that range. And they say the cost of for the average stock, the cost of a 3-month put in their universe of analysis stocks is up 16%. So I don't know. Take that for what it's worth. I just think it's funny whenever Goldman weighs in. Usually they're talking up their book in some capacity. This case, just more of an interesting note. Are you going to put this in your research notes for your fund, sir?
I probably will not.
How dare you? How dare you not take the all things Goldman with the series? Because we're being silly, listeners. But of note, we talked Bitcoin earlier in the show. Futures, like I mentioned, we're selling off pretty aggressively. Let's see how we're looking right now here. Off about 190, 185 handles out there in the contracts. Not doing a ton of volume out here today, which is kind of surprising. We'll see how that shapes up for the rest of the day. It's like all of it in the front month and then a couple of contracts in the 2 contracts out. And that's about it. Worth noting, though, kind of on a related tip here, more interesting, weird stories coming out this week. I think this was Fortune who had this. And they were pulling the data from Bitcoin.com, which is my favorite source for all things I've never heard of them, but I'm sure they're good. They went out, because we're talking a lot. Of course, the crypto furor really hit, and the volatility in the space really hit in the second half of 2017. That's when things really started lighting up. And we started seeing all these ICOs, of course, initial coin offerings coming out left, right, and center. And anyone who looked at that probably thought, man, it doesn't really smell too great. You got names like Overstock all of a sudden overnight becoming crypto plays, Kodak, others. Everyone and their mother was getting into the ICO game. It seemed like it was ripe for exploitation and scamming. And that apparently is exactly what happened, Mr. Meatball. Of the 902 ICOs that this Bitcoin.com tracked from last year, I had 142 failed completely. They never got the funding they wanted. Another 276 failed after getting funding, which is probably more damning when you think about it. That alone is 46% failure. Then they found another 113 projects that they called, well, they termed semi-failed because the guys just pretty much skedaddled with the money. They just vanished, leaving empty Twitter accounts and everything else like that. So you add that in, you're pushing 60% in the failure rate. The total amount lost on these projects, close to $250 million, about 230 odd million dollars going on. And of course, as they point out, which I just mentioned as well, most of this happened in the latter months really of 2017. So this is a lot of fraud to take place in just the span of pretty much a few months. We saw a lot what they're terming exit scams. It's kind of like the old, pump and dump, just on the ICO front instead. So the numbers, I think you can term them appalling. This is my warning to you, Mr. Meatball. Don't take the new fund and dump it all into an ICO, please.
No, what was this? Did you hear the story about the crypto that was involved in produce?
I didn't, but it doesn't surprise me. Doesn't surprise me at all. There's a coin for everything at this point.
So it was a coin that somehow linked itself to produce allegedly, and what happened was they did the ICO. It made like $10 million. They took all the money, ran off, and in the place of what used to be the website, they left a word that rhymes with Venus, and that was it.
That's that I think you just summed up most of the crypto sector right there, sir. Get the money, leave a little vulgar epithet, and move on with your life. So well done. It's been a rough week for crypto. Of course, Bill Gates saying it's the cause of much death. So not a lot of good headlines for crypto, of course, selling off today. I know all you crypto lovers going to come at me. I'm just repeating the data for you guys. It's not my numbers. Go at Bitcoin.com if you want to go at somebody. Meanwhile, though, it's time for us to come at you with a bunch of, you guys are coming at us with a bunch of your questions. See how many we can get. It's time for the Vol voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail, the portion of the show where we ask you guys questions. You guys ask us questions. It's a big party. Let's kick things off with the questions. I mentioned one of them at the top of the show. We asked you this week about your outlook for is SVXY is even going to survive the year. 50% now saying yes, which, of course, the recent changes probably make that, from a technical perspective, much more likely. The blow-up risk is cut in half, if not more. But on the flip side, the demand is going to be cut way more than in half. So you could have a product that ends up going the way of the dodo just from lack of demand, if anything else. So you factor that in, maybe not so much in terms of a good outlook for the product. But our actual question of the week, we asked you guys at the beginning of the week, kind of prescient as it turned out, We said, hey, there's a lot of debate about SVXY these days. Will it survive? Is it poised for a serious upside? We're going to table those questions and just ask you instead, because a lot of you out there were slinging SVXY. We know you were hitting us up. What is your weapon of choice? How are you doing it? We said, are you going to be naked long, just naked long SVXY? You're going to get long some verticals in the calls, going to get long some verticals in the puts, or just get long the underlying with a nice tight put hedge. A bunch of you wrote in with other alternatives. A lot of you were suggesting earlier in the week the covered call. I hope for your sakes that didn't come to... Actually, underlying kind of settled out a little bit now, so it seemed like that was going to be a lot worse than it probably did. You probably did all right, because the premium certainly came in on those calls. So if you managed to be a little depth with the underlying, you could have worked out pretty well in the covered call environment, even though it looked kind of dicey in the early going, particularly when that first came out. There was not a lot of love for SVXY underlying going around, but I think it ended up working out in your favor. So, but a lot of you were writing in for that. Mr. Meatball, I think you've weighed in before about the verticals. Are you still on the call vertical tip, or maybe you decided you want to just get long a ton of SVXY? What are you feeling?
Well, I mean, yeah, a long dated call vertical is the best way to go, but at $11, doesn't really cost you that much just to buy the stock anyway. There is that.
Are you clamoring for a 50% VIX inverse product, sir?
No. I don't know that we've talked about that. But if you want to know something that makes me infuriated, the way they handle that is like embarrassingly bad, and they should be ashamed of themselves. That 50% inverse thing. I think we did talk about this earlier in the week, but they did not do themselves any favors in the way they handled it.
I think that's putting it mildly, sir. Yeah, they're.
I mean, if their goal was to look like complete jerks, they managed to figure it out.
We got a lot of comments on that, so we'll get to that right now. Really quickly, the poll, I'm sad to say, is actually the number is actually going up, which is kind of interesting. 62% here to round out the week saying they're going to get naked long SVXY. So clearly, you still have optimistic that it's going to survive the year because you're buying it. 20% going long the call spreads or calls. 10% going long the stock with the puts or the underlying with the puts. 8% only going the puts or put spread route, which is kind of interesting. Yeah, so Mark, everybody and their mother was chiming in on this bad boy. Danig saying, first XIV, then SVXY. Are they coming for VXX next? I like that. Oh, actually, this gets to what we were just talking about, Mark. I'm going to jump around here a little bit. A lot of people were chiming in on this. Boris, good old Boris. I'm not sure if you ever met him. He used to be over at ISC. I don't know what he's doing now. He's kind of man about town. But he chimed in when we were talking about kind of how, let's say, the issuers of SVXY didn't quite handle it the best. He chimed in and said maybe their FCM partners didn't give them a choice. And that's kind of what the Rock Lobster alluded to on the option block yesterday as well, that they could have had their hand forced a little bit by their partners saying, you reduce this or else because we're coming at you from a margin perspective. So what do you think? You think that has any teeth to it, Mark?
I'm sorry, what was that?
The notion that they kind of had their hand forced, that they didn't really want to do this, but that some of their partners may have said, hey, you got to trim this thing.
Regardless, they still could have handled it better. Whether they wanted to or not, the fact that they gave no warning and they gave no time, nothing. They are, this is bad. They screwed up, and I don't really care what their partners thought. This is kind of ridiculous.
It is worthy of note that they mentioned that this is subject to regulatory approval, so it has to be approved. Of course, this is obviously their intent, so it shows what they want to do with this product going forward. So it's kind of hard to have a robust outlook for SVXY and for the issuer's faith in it if they want to do this and then the regulators slap down on it. It's kind of funny. I assumed there was language in the prospectus saying that they had the right to adjust the investment objectives at their kind of whim anytime they wanted, because if they're doing this, they seem like they had to. I haven't read all through 100-plus pages again of myself. We had a lot of reporters, as you might imagine, hitting us up this week, and a lot of them had looked through it, and I kind of put it to them if they had seen it, and all of them pretty much unanimously said they didn't see that language in the prospectus. So I'd have to imagine that if you're a securities litigator, you're probably licking your chops right now over this one. There's a lot of people out there who are unhappy, clearly just judging anecdotally from our social media and our email and everything else. We had a lot of people, as we reported on this show, loading up on SVXY calls in the subsequent weeks coming, including the day that it got cut. So you had people buying calls and verticals en masse that day, only to have that night after the session's done, those calls pretty much wiped out because SVXY deciding with little to no notice to just change the investment objectives. And again, we've warned about Franken products before here. They kind of play by their own rules of engagement. You kind of got to know that going in. But yeah, I'm with you on this one, Mark. Even though it is a hybrid Franken product trying to replicate something else, and even though they have 100-plus pages of prospectus detailing all the caveats with this thing, this is still, I think, ham-fisted is the best way you can call this. And I probably would say there's going to be litigious at a certain point. I've got to imagine there's got to be a few angry clients out there who are going to call an attorney over this. And we have not seen the end of this. Even if it does get regulatory approval, which it probably will, regulators saying, oh, you want to reduce your risk? Of course, we're going to be in favor of that. But you're right. When people are loading up that day even on tons of out-of-the-money calls and verticals and everything else in SVXY, only to have that stuff just slapped down within a few hours, that leaves just, I think, a bad taste. Doesn't even cover it. That's pretty borderline toxic. And yeah, all of you out there, I'd be curious. I've sent us your thoughts. If all this craziness in this VIX ETP space, has that given you pause about trading any of these products, not just the inverse ones, but any of these ones? Because they are pretty much all at the end of the day are these kind of Franken products, and they all have these weird rules of engagement. Some are more robust than others, obviously, but I think our poll even said a lot of you are done with the inverse vol space, but are you done with maybe the VIX ETP space for a while in general? I'd be curious to hear your thoughts on that. We got your old buddy here, F Contango Trader, weighing in, Mark, as well. Talked about before about that ridiculous VIX strangle, the 1075 strangle. We said, would anyone sell out there? It's someone's trading this. He chimed in, said, yes, if I owned a lot of gamma in the SPX or SPY. Otherwise, no. So he's saying if he had a lot, I can maybe see that. If he had a lot of already, skin in the game with some SPX or SPY options, then perhaps a strangle wouldn't be the worst thing. Here's an interesting question. J3 Dingle, I believe this is the person who sent in the music for you, Mark, the suggestion for your segment, writing in again saying, hi, Mark. Well, hello, Mr. or Mrs. J3 Dingle. They say, given that both RexxShares and ProShares have rejiggered their vol ETPs, what are the odds that VXX does it too? Well, this gets back to what I was just saying. And a lot of people have hit us up with this same question. Obviously, VXX is the big dog in this space, Mark. We haven't heard, at least I haven't heard any rumblings out there of yet that they would do this, nor they're not really in the inverse space, so they're not being quite as pressured perhaps to do it as the inverse providers are. But I don't know, what are your thoughts that maybe VXX does something crazy out of left field next?
Doubtful. There's no reason for them to do anything. Trading is super robust. They don't have the same risk of blowing up, but that's it. I don't know. Absolutely no. That will not happen. In fact, the ETN, since it's a note, is already done. I don't think they can go and change the note.
That's true. The ETN does give it a little bit different, but we've seen crazier things. We don't even know what kind of rules they have for SVXY, if they can or not in their prospectus. Yet they did it. So crazier things have happened. There they go. An absolute no from Mark. A pretty strong no from me. I'm not quite as certain as him because we've seen a lot of more issuer panic in the space over the past month. And that's the unknown in the space. As I argued to all of you out there who were arguing to me about how robust SVXY was, I said, what about that little bit of delta for issuer panic? And as we've seen now, with two big products, that's been the case. But again, they're inverse. VXX doesn't really seem to have an argument for why they would need to do anything. But weirder things have happened. All right, a lot of people asking about this. Tills wants to know, any chance the recent change-up with SVXY is just to appease regulators? Maybe it will switch back later in the year. There's maybe a little bit of hope contained in this question mark, maybe a little bit of wishful thinking. He's like, hey, this is just a little bit of a shell game here. They're going to switch it to half half short VIX just for a little while to get the regulatory heat off their back. Then they're going to go back. I like that idea. It's pretty funny. I don't see it happen. Imagine if they did that, just the madness that would ensue. I don't know. What do you think of Mr. Till's suggestion here? It's just a bait and switch game, Mark.
I don't think that's true, but I'm trying to imagine a way that they could have handled the last couple of weeks any worse. It's, what's going on is embarrassingly bad, and, it's a problem.
So you don't think it's going to be reversed in a few months once the regulators get off their back?
No, I do not. But it's ridiculous. I mean, I think that what you're looking at is just the way this has been handled is just utter lunacy. And ProShares should be, these ProShares and Credit Suisse should be embarrassed, is what it comes down to. And what this has done to their reputation should, the amount of damage done to these two banks' reputations, bank/fund issuer, it should be embarrassing. And actually, Mark, the one we didn't talk about was VMIN and VMAX. They completely changed their approach as well.
You're right. We didn't. I offered them a chance to come on the show this week. I think they realized they had to get their ducks in a row before they could. But yeah, you're right. They changed their products as well. Why don't you give our listeners a little bit of an overview of what they did?
Well, it looks like they've created a competitor more for VXZ than VXX. So their old one was a competitor for VXX. This one is more of a competitor for VXZ. They're holding a 2 to 6 month time frame. VXZ holds a 4 to 7 month time frame. So this is more of an intermediate holding.
Yeah, it looks like they're pushing themselves down the term structure a little bit. Maybe I hadn't looked at their results. Maybe they got a little snake bit from the recent, shall we say, gamma coming back to bite you and all this short. You play in that front portion of the curve, it gets pretty dicey when things get crazy. Maybe they got tired of that. Maybe it didn't work out as well as they want. Maybe this has been their plan all along. I don't know. I was hoping to ask them this week. Mark, what do you think their reasoning for it is? You think they just kind of got a little tired of being that close to the fire?
Well, I think they realized that they were having problems with the weeklies. It wasn't really doing what they wanted to do. And there's a need for that space. That's a duration that really nobody has. So, maybe they're thinking, people want that 90-day duration that aligns with the old VXV.
The old VXV. Yeah, we don't see people clamoring for that exposure, but then again, it wasn't really available to them, so maybe that's why. Maybe it was a bit of a chicken and an egg thing. If you have a product, people will ask for it, whereas if it doesn't exist, I don't know. But, interesting move nonetheless. They're moving into, shall we say, the less red waters, the more of a blue ocean strategy, perhaps. Not many competitors there, and also literally from the sense of all the blood that was in the water after the big movement. So you get a little bit farther out the term structure, a little bit less of that. So maybe a little bit of column A, a little bit of column B. We'll have to get them on the show, and we'll ask them themselves why are they doing this. We got a comment from Volatility Analytics just sending us some analytics, I guess as his name implies. He says SPX 37% of days this year has had a 1% change, whereas last year we had 8 total days. Granted, 37% sounds like a lot. We're only obviously a couple months into the year, but still we're rivaling the number of days we had in total of last year already just in the last couple of months. So keep that in mind. Let's see. This guy, Ragin1234, I guess he is Ragin. He said the XIV and SVXY, what's to blame for that? Uneducated customers are to blame for the implosion, or losing their money, I guess he's saying, for not doing their due diligence. We've talked about that. Yeah, there certainly is caveat emptor in all those products. So if you listen to this show, we've warned about them for a long time, that you really need to do your homework if you're going to trade these things and realize that there are these caveats lurking in the prospectus there that maybe you don't want. J3 Dingle chiming in again, Mark. I guess he's listening live. He asked before about whether they're going to change VXX, but he chimed in and said, but they did it for UVXY too, so it's not limited to inverse vol. So there you go. He's throwing that back in your absolutely no face.
And that was also a margining thing with ProShares. And that's a double. So, they did that. That is not a VXX does not have that issue since it's single, non-levered, non-daily. It's a totally different thing.
Well, there you go, J3 Dingle. Still an absolute no from the meatball. I'm about 95%. I'll leave the 5% open for what we call these days issuer panic. In fact, I think we have a listener who chimed in on that. Where is we got so many here? We're running out of time. Well, maybe we'll get to it. I think the world is LLC1. I think the world just woke up to a new risk for vol products, issuer panic risk. We all knew it was in the prospectus, but now we've seen it materialize. I wonder how this will affect risk premiums in these products going forward. I think this came in like a week ago, so clearly we've seen what's happened with the issuer panic and resulting in the premiums in SVXY. We got a ton more here. Maybe we'll do a whole show one day. People asking for strategies, people asking about analysis, people asking about combo stuff. We're running out of time, listeners. We'll get more questions going. Keep them coming. We answer as many as we can. Let's see if I can squeeze in one more quick one. Some of these are long. Let's see. This guy's saying, John Schreiber saying the stocks. He's talking about the sell-off and the people blaming inverse vol. He's saying the stocks got sold to cover the inverse leverage trade. It's all connected. Passive funds are passive. So he's thrown a little tinfoil hat back into the mix. A little zero hedge action there. Unfortunately, we'd love more of that, but we got to keep rolling to our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, what a crazy, crazy week it has been. I was looking pretty good, I got to say, in my crystal ball prediction until someone, I won't say who, started talking trade wars. And then all of a sudden, all hell broke loose. And so we were flirting with my nice 1675. We were right in that range, 16.5 or so. And then, bam, it all went crazy. I was the highest, so I guess technically I'm the winner. We're at 22.25 right now to close the show. But when you're 4 or 5 handles off, I don't consider that a victory. Bill was second. Actually, Mark was second highest with 15. And Bill came in, our guest last week, came in last with a 14. So all of us, shall we say, a wee bit lower. Mr. Meatball, I will go first to allow you some time to consider your position and or what you want to happen next week. But yeah, we're up here juicing. Mr. Trump continues to add fuel to the fire, saying trade wars are great. They're easy to win. I wish he sat through maybe an Econ 101 class. He may have a different opinion, but that's a conversation for another day. Instead, let's look here. I don't know. This is obviously a lot of brouhaha. We got to move a lot to even maintain these levels in the low 20s for VIX. So I'm going to go out on a limb and say maybe the tweets will quiet down. Maybe the threats of retaliation will quiet down, and we'll get a little bit more cooler heads next week. But maybe not. I'm vacillating between the 18 and the 17 handle, Mr. Meatball. I'm going to split the difference. I'm going to say 1775 this time next week. Cooler heads prevail. What say you, Mr. Meatball? You going to go the other way? You going to go 35 on me?
I'm going to go 28.
Wow, you are feeling it.
I mean, I think I don't know that we'll settle there, but I do think that we are going to see VIX threaten 30 again before we get the full unwind. The only thing that's a little weird today is what's going on with the Russell 2000, which makes no sense.
We'll have to table that conversation, sir, for another day. That music means we've come to the end of what has been truly an epic journey through the world of volatility. Listeners went all across the board: inverse vol products, regular vol ETPs, big VIX, a little VIX, ridiculous VIX strangles. A lot of your questions on all of the latter. We'll try to get to more, don't worry, throughout the rest of the week. Maybe we'll get some on option block. We'll rotate them. We got so many. We're trying to get to you all. We read them all. We try to respond to them all. We just don't always have time to answer them all directly on the show. But don't worry. If you write to us, you get your comments, your answers. But that music means, of course, we are done. Interesting stuff yet again. Mr. Meatball, my pick is a little optimistic. I'm hoping that we're right, but there is definitely a dark part of me that concedes we may indeed be in for some gloomier waters this time next week. So that said, Mr. Meatball, if I want to learn about all this volatility stuff, maybe to catch a webinar or two, maybe subscribe to a newsletter, where should I go? What should I do?
Yeah, just go to optionpit.com and check out what we have going on in the world. We're doing and if you're interested in volatility and you want a fund structure and you're a qualified investor, reach out to me. Mark at CarmenLineCapital.com.
There you go. Hit them up on the email. Let's go to optionpit.com. Sign up for the newsletter, all the other good stuff they have going there. All you listening live, we're going to take a little bit of a break right now, but you can stay in the chat. We're going to put some other shows in there for you to enjoy. Take a nice break, go get a beverage, hit the restroom. We'll be back. If you like talking all things volatility, skew, index, all that kind of fun stuff, unusual activity, we'll be back in about a half an hour with Twifo This Week in Futures Options. Going to talk, probably spoiler alert, a little bit of index skew and some other fun stuff, index vol, as well as vol and the commodities and everywhere else that we see it. So it should be good stuff. So stay tuned, all you listen at on the podcast, of course. Then we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.